financial systems always helps in the availability of all kind of the feasible information regarding the investment options or investment portfolios that the investor is going to save for. So they always helps in the stability of flow of the easy flow of money, as well as they always improvise stability, investment habit in the mindsets of the consumers. Any kind of investment which is for the lesser period of time, that is for less than a year, so those will be called as a treasury bills. Hello students, how are you all? I hope you are doing good. I welcome you to the Financial Market and Services subject. So in today's session, we are going to start with the first unit, that is overview of financial system. Before I give my deep introduction about the topics, let me give my brief introduction. I'm Vaishnavi, Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So we'll start with the agenda first. So first we are going to start with the introduction, what is financial system, so an introduction of it. Next we are going to learn what are the functions of the financial systems, then features of financial system, then importance of financial system and components of financial system. So let's start with the first topic, that is introduction. So financial system, so it is a systematic operation of the financial related transaction that in a country will be called as the financial system. So we need the kind of a regulator, we need some policies and we need some rules and regulations so that there is a smooth operation of the financial transactions that should be taken place in a country. So I'll start with the introduction here. So a financial system is a set of institutions such as banks, insurance companies and stock exchanges that permit the exchange of funds. So as I've told, it is a set of the institutions like banks, insurance companies and other financial institutions. Why they are being set up? In order to have a exchange of funds, that is exchange of transactions. Financial systems exist on firm, regional and global levels. The borrowers and lenders and investors exchange current funds to finance projects, either for consumption of or for productive investments and to pursue a return on their financial assets. So why we need a financial system? So that borrowers and lenders can meet in a single place and where there will be exchange of funds for the development of the economy or for the development of the particular region or community or for the development of the investment options or investment productivity in their portfolios. Okay. So the financial system also includes set of rules and practices that borrowers and lenders use to decide which project get financed, who finances the project and the terms of the financial deals. So this also contains a proper code of conduct, that is rules and regulations regarding who are going to finance the funds and how much funds is going to get and what type of the industry or what kind of project that they are going to start it for. So let's start with the functions. So first is to connect with the investors with the savers. So the financial system act like a bridge between the borrowers and the lenders. So here there is a safe place and there is a exchange of funds for those who need of money, and there is also a scope for the people who are going to invest it. So next is about assistance in the selection of a project. Financial system overall, the main objective is to assist in what kind of project selections should be there, whether it might be infrastructural projects, agricultural projects, technology related products or any productive or any research and development related products, etc. So next is risk allocation. So the one more important function of the financial system is to hedge the risk. So we are like investing in different types of portfolio. So we will be having types of risks. Okay. So it might be certain risks and uncertain risks. So that means it might be kind of sudden risks or it might be an planned risks. Okay. So financial systems always helps the investors to hedge the risk. Next is about availability of the information. So financial systems always helps in the availability of all kind of the feasible information regarding the investment options or investment portfolios that the investor is going to save for. Next is reducing the case of asymmetric information. So that means financial systems always will be transparent, honesty, and imparallel towards the customers, that is their investors. So there should be an easy and symmetric or logical way of explanation. So rather than any such kind of misguiding or misinformation in the projects. Next, these are the features of the financial system. Under that, first is about financial system establish a link between the one having the surplus funds to those who need of such funds. So as I've told, the function as well as the main feature of the financial system is what? They act like a bridge between the people who are in need of the money and people who are ready to invest in such kind of projects. Okay. So next feature, financial system contributes towards the expansion and the development of the financial markets. So they plays a very crucial role in development of all the kind of financial institutions and markets inside the economy. So they plays a high impact on the easy flow of money. So in that way, the financial markets are also can be improvised and financial institutions can also be improvised. So if the country is having the best financial systems, then the country is also having the best kind of financial market and financial institutions in their economy. So next feature, the financial system facilitates the efficient allocation of financial resources for the benefit of society and the public at large. So one more important feature here, financial systems is being implemented. Why? Because so that the resources whatever that has been gathered from the public or from the investors needs to be deposited or needs to be spent on such kind of projects or such kind of welfare activities that will be beneficial for the society and for the public at large. So next feature, the financial system boosts the economy quality and accelerate economic development. So they are also reason for boosting the economic development, and they are also reason for development of infrastructural, agricultural, technological, research and developments, etc. Developments inside a country. Next feature, the financial system lays the foundation for an ideal economy. So as I've told, they place a high impact on facing or the changes of the economy inside a country. Next, financial system builds an efficient portfolio for fund seekers. So they always act like a easy way, or they always like a helping hand for the people who are want to invest into the different kind of portfolio. So financial systems will always provide all the information in such a platter that the investor can be getting the beneficial portfolios or project for the multiplication of the wealth. Next is about financial system reduces the transactional costs. So it reduces the extra other operational expenses such as the transactional costs for a economy or for the project. Next is financial system ensures availability of all the price related information. So one more feature is here, the financial system ensures that there is a easy availability of all related kind of projects, investment portfolios, etc. for the welfare of the economy. Next topic, we are going to talk about the importance of the financial system. Under that, first is increment or in the output and the production of a economy. So financial system plays a high impact on the easy flow of transactions or easy flow of money inside the country. So in such cases, so say like if any kind of money has been stuck under any one roof, so there is a high chances of the prices inflations and high chances of economic disruption. So that is the reason why the financial systems rules, regulations, code of conduct is being implemented in such a way that there is no kind of scams or there is no such kind of fraudulent activities that should be taken place inside the market, and it also develops the economical functions inside the country. Next is accelerating the quantum and pace of savings. So financial systems always helps the investors to implement or to improvise their saving habits in their life. Next is about facilitating the innovation. So that means, so they always funds such kind of projects or such kind of portfolios that usually helps or that usually initiates in the innovative kind of products, goods or services for the country. Next is evaluation of assets and increases the liquidity, production and spreading the information. So financial systems always will be should be developed by the code of conduct, and it should be maintained by the all the kind of the financial institutions, banks, or any kind of institutions that are related to the financial transactions. So they should maintain a proper books of account so that there is no such kind of fraudulent activities that needs to be taken place. Next is about provide risk management services. So they also give the advisory services to the investors in regarding the risk management in the portfolios. Next is about to ensure stability and resilience. So they always helps in the stability of flow of the easy flow of money, as well as they always improvise stability investment habit in the mindsets of the consumers. Next function, introduction of discipline in management companies and guiding them. So one more important function for the financial institutions is what to guide the financial institutions, or to guide the any kind of market, so that there is a no such kind of fraudulent or misinformation is been published inside the economy. Next is about accelerating the rate growth. Okay. So economic growth can be improvises with the help of the financial systems, as I have told. So they place a high impact on the exchange of goods or services, or exchange of money, worth related goods or services. So there, in case there is a higher GDP inside the country, so if there is a higher GDP, then we are going to have the higher economic development inside the country. Next, the components of the financial systems. We have got 4 types of components. Those are financial institutions, financial assets, financial services, and financial markets. So under that, first is financial institutions. So financial institutions act as a mediator between the investor and the borrower. The investor's savings are mobilized either directly or indirectly via financial markets. Banking institutions or depository institutions comes under the financial institutions. So this includes the banks and other credit unions that collect money from the public against interest provided on the deposits made and lend the money to the one who are in need. So we have got one more type of institution, that is called non-banking institutions or non-depository institutions. Insurance, mutual funds, and brokerage companies falls under this kind of category. They cannot ask for monetary deposits but sell financial related products to their customers. So in case of financial institutions, we have got 2 types of it. So under that, first is banking and depository institutions, non-banking and non-depository institutions. The primary goal here is what? For the collecting of the money from the people who wants to invest in, and giving the money to those people who are in need of. So it's a basic kind of transaction or basic kind of operation that is being taken up by the banking or the depository institutions. Whereas in case of non-banking institutions, there is no kind of accept in the deposits, but they still will be going to deal with the financial related aspects. So examples, we have got insurance, mutual funds, and brokerage companies comes under the non-banking and non-depository institutions. So next we have got further classification, that is regulatory institutions that regulate the financial markets, like we have got RBI, IRDA, and SEBI. So next under that, we have got some intermediaries under the commercial banks. So the bank that provide loans and other financial assistance, such as SBI, Bank of Baroda, PNB, those are all comes under the commercial bank. So those again comes under the branch of banking institutions. Then non-intermediary, so these institutions provide the financial aid to the corporate customers. It includes NABARD, SIDBI, etc. Next, these are the financial assets. So the products which are related to the financial markets are called financial assets. So based on the different requirements and needs of the credit seeker, the securities in the market also differs from each other. So anything that all the kind of capital market or money market, so any kind of assets that are being operated in these kinds of markets will be called as the financial assets. So some of the important financial assets we have got, that is call money. So when a loan is granted for less than 14 days, so it will be called as the call money. So if it has been for more than 14 days, so it will be called the notice money. Next is term money. So when the maturity period of deposits is beyond the 14 days, that will be called as term money. Treasury bills, also known as T-bills. So these are the government bonds or debt securities with a maturity of less than an year. So this has been again issued by the government of India, that is central government. So any kind of investments which is for the lesser period of time, that is for less than a year, so those will be called as a treasury bills. Next is certificate of deposits. It is a form of electronically generated for funds deposits in the bank for a specific period of time. Next kind of instrument is we have got commercial papers. It is an unsecured short-term debt issued by the corporation. So any legalized companies or any legalized joint stock companies are going to call for the commercial papers. This is also kind of a debt instrument that has been called for the issuing to the public for the collection of the money. So if it is for, this is for the shorter period of time. Next is financial services. So any services provided by the asset management and liability management companies. So they help to get required funds and also make sure that they are efficiently invested. So we have got some types of financial services. Under that, first is banking services. So any kind of financial institutions which are in the operations of accepting the deposits and granting the loans, those comes under the banking savings. So, or banking services. So, they also involve in opening of current account, savings account, RD account, FD account, etc. And they also provide the credit card, debit card facilities to the customer. So, all those kind of services comes under the banking services. Next is insurance services. So, issuing of any insurance policies, accepting the premiums, whether it for health, for life or general insurance, all those comes under the insurance. So, it involves in the human insurance as well as for the vehicle or any other consignment insurance also. So, next is foreign exchange services. So, it involves the exchange of the forex currencies inside the economy. So, that is called as a foreign exchange services. Next is financial markets. So it is designed to finance long-term investment. The capital market deals with the transactions which are taking place in the market for over a year. So further, the financial markets are again further divided into corporate securities market, government securities market, and long-term loan market. So the financial markets, we have got under two kind of markets, that is money market. So it is mostly dominated by the government, banks and other large institutions. This is kind of a money market for a shorter period of time. Any kind of instruments that you're going to invest for a shorter period of time, so that comes under the money market. So there are again two types of it, organized money market and unorganized money market. So next is foreign exchange market. So it is one of the most developed markets across the world. The foreign exchange market deals with the requirements related to multi-currency. Transfer of funds to the market takes place by the foreign currency rate. Next is about credit market. So a market where short-term and long-term loans are granted to the individuals or organizations by various banks and financial and non-financial institutions is called credit market. Any kind of loans that are being availed to the people, like whether it may be personal loan, car loan, home loan, etc. by any financial and non-financial institutions, that will be called as a credit market. So these are all the important topics that we have discussed in the first unit. So in the coming session, we are going to talk about the financial institutions, importance, what is money market, what is capital market. Then we have got two types of banks we have got, that is IFCI and IDBI bank, and objectives of IFCI and IDBI bank. So these are also again the important topics that we are going to talk in the next session. So I'll meet you in the next session. Thank you so much.